Let's get to Mario Singh, Director of Training Education as well at fxprimus.com. Around the set with us here at the SGX, together with our guest host, still Mikio Kumada from LGT Capital Management. Mario, good to see you. Good morning. Are you unusually uncertain about the U.S. economy?
Well, let's just say at this point, I'm usually certain about the U.S. economy. I personally feel that the U.S. economy at this particular point, it is doing a lot worse than what Europe is having. You're seeing a lot of risk returning to the markets right now. We saw the euro pop up to about 131. So especially what's happening in the next couple of days at least, I'm going to see the GDP reports coming out for USA coming up, I think, later this evening, tonight. Right. I'm expecting a low number. So honestly, I'm saying that the euro will be heading higher, the pound will be heading higher, the dollar is going to be quite a lot of muted gains.
How low? Consensus is down to 2.5% growth from 2.7 Q1. What are you looking for?
I'm looking at about 2.4% at this point. Now, what's going to be happening? What is interesting for us to see, we see consumers spending very low. Now, noting that 70% of the USA's economy, 70% of that GDP really goes to retail and consumer spending. That's number one. Particularly number two, trade deficit in May for the USA, as I think there was the lowest level in about 18 months, right? So that's really going to be something that the Fed is looking at. I think that's one of the reasons why Ben Bernanke mentioned we are unusually uncertain about the economy.
Just how bad, Mario, do you think the economic picture needs to get in the US before the Fed says, okay, we're going to release more extraordinary stimulus measures? How bad does the data have to be to trigger that?
I think at this point they're really looking, the one key thing they're looking at is unemployment figures. Now that is really at sky high levels. That's about 9.6% at this particular point of time. So I think some of the people at the Fed, they've been saying that, hey, before it comes down to deflation, before they see something like what Japan is going to be experiencing, they are really starting to say, let's have a lot of QE. Let's start buying up treasuries. Let's start buying back mortgage-backed securities at this point of time. So at this particular era where we are now, I think they are getting a little bit on tenterhooks. Yeah. So I don't think they're going to see... they're going to wait for deflation to happen. That's going to be, God forbid, that happens.
All right, Mikio, I mean, what Mario is referring to, of course, partially at least, is St. Louis Fed head James Bullard's comments. What do you think of those?
Well, I mean, I think he's playing he's trying to reassure markets that they are very flexible in terms of the policy, unlike perhaps the Europeans, who, of course, have had a very big ideological blockade against printing money, to use a simple term. But I don't, at this stage, I don't think it's likely.
This is what one part of the market wants to hear. So what I'm interested in finding out is, you know, is this Bullard a part of a good cop, bad cop routine at the Fed, or is there actually dissension and division?
I don't think there is a dissension in division. I think it's a good cop, bad kind of situation. And I also don't think at this stage that it's quite likely, because the U.S. economy is weaker than expected in recent weeks, but it's not really, you know, it's not doing badly. It is a normal cyclical thing to have a slowdown after you have the initial V-shaped thing. You know, it'll go away. You know, as if you go with the historical pattern. Of course, things might go wrong, but you know, so far the case is let's see how this plays out over the next few weeks. And I think that's the consensus in the Fed. And you need somebody to say, "Don't worry, we'll print money if needed." You know,
but policymakers have to be very careful in how they frame their statements, because there's a danger that an overly bearish or a negative view on the economy could become a self-fulfilling prophecy.
Yeah. That's why you only have one or two guys saying things like Mr. Bullard does at this stage, whereas you know, you could keep a more conservative stance with the benchmark things. The good thing, though, maybe they shouldn't walk around with striped ties. But I mean, keep in mind that Europe is doing phenomenally economically. Despite the fact that 2 months ago we were seeing instant death of the euro, or some people in the markets, and that just didn't happen. I mean, there is a double dip in German unemployment rates, for example. If you look at it, it's just falling very close to a decade low.
And it's off a very low base.
Yeah, of course it is, but the bottom line is it is improving, and it continues to improve in the mid of a very scary sovereign debt crisis that was very recent, and it's just not unfolding that way. Now, of course, there are absolutely risks both in the U.S. and in Europe, but for the time being, markets are volatile, but they haven't really corrected a lot. So I think that's also a point that the central banks would be watching, to see the confidence in financial markets as well. And it looks like we are sort of, you know, stabilizing at recent levels.
Okay. All right, listen, guys, we got to go. Great to talk to the both of you. Thank you for your time, and we'll do it again soon.
Thank you.
Okay, we've been talking to Mario Singh, Director of Training, also Education at FXPrimus.com.